Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So we just had a little bit of a switch here, but right now we're looking at the New Zealand CAD and British pound being weak. Over here, the Aussie CAD and New Zealand. Oops, there is a British pound under there. The CAD, New Zealand, British pound are weak, and the strength, we're looking at the strength of the yen on the three highest time frames, the euro and the Swiss. So we'll be trading to the strength of the euro, strength of the yen, strength of the Swiss, and trading to the weakness of the New Zealand, the CAD, and the British pound. The ones in the middle, I try to don't give us any really clear direction. All in all, I like to see at least a 3-point spread between what time frame we're looking at. I like to see at least a 3-point spread. So like the US dollar on this 30-minute chart, it's a number 4. The British pound is a 0. That gives me a 4-point spread. If I have a US British pound trade that develops, I'd be looking for the strength of the US dollar on that one. And that's pretty much how I gauge it, see what kind of a spread I have between the two pairs I'm looking at. So let's go to the charts and see if we can find anything. And you don't see my chart yet because I'm on a different share here. Let me try this again. Share, main screen. Let's try this. Now, do you see my charts? Tell me yes.
Yes.
No? Okay.
Yep.
All right, good. So let's see here. I was looking around with this, the Aussie. See, let's just take a look at that US yen, a US British pound. Let's just take a look and see what I can find it here. Pound US right here. Let's take a look at a 15-minute chart on the pound US and see what we're looking at. And we're going to talk a little bit about the Fibonacci's today. Now, Fridays are usually kind of let's just talk about things that are maybe of a fog to anybody in the room, that there's some things that just aren't quite clear, and trying to figure out why we do things and how we do things. I was talking to Brian yesterday, and we were talking a little bit about the Fibonacci's, and we probably need to get a little bit of discussion about how and why I trade and find the zones that I do. There's a couple of different ways of doing it. The primary way that I look at is I usually start with the 15-minute chart, and I'm looking for a range. I'm looking, especially with this Arrow software, which is really handy, is I've got the red zones, the green zones, and I'm looking for strong moves between the two zones. And then I'm looking to see where the price is right now. And wherever the price is right now, I'm going to see where there's a stronger high and a stronger low on above and below where the price is, and using that for my zone. I like using the red and the green zones, and then if there's another zone in between on the up to the right of it, that's fine. That's works fine for me. But I like seeing a strong move between the two zones. This is not a strong move up and down. This is just going sideways. And we're really trying to find out where the sideways motion is between two pivot highs and pivot lows. So I kind of like this right here, but I don't know that this is going to be big enough of a range to be able to draw to get the distance between my different Fibonacci levels that I'm looking for. Because I like to see, remember, as we say, we like to look for at least a 7-pip target. Well, if these zones here, if this is my higher time frame, and these zones are too close together, like so right now, that's a 10-pip. That's about as close together as I like to see it. I like seeing 15 pips is nice. 10 or more, 7 or more, I can work with. So I can use this pivot high, I can use this pivot low, and by going with directly from the point to point, that gives us pretty much the absolute point of where the ranges are. There's another piece of software we use on the trading view, and we'll show that later, of how we have some institutional levels. You've heard before about the quarters theory. And the quarters theory is basically using key price points on a number line between 0 and 100, being the 25, 50, 75, and 100. Those are the key price lines. And the quarters theory uses those quarters points on a dollar for the dollar chart, dollar move, to find out where the bounce points and zones are. Well, there's another thing that we use, and I'll show you that right now on this with the trading view. If I can get my trading view chart up, let's see, I got to make that small, and my trading view, I'll look at the, let's just use the Aussie US here. I've got an Aussie US chart. We're gonna clean up all this up. And with the Aussie US chart, you can see that this is a tool we have for TradingView, and anybody that has TradingView, we can, if you stick with us enough, you'll probably be able to get access to this. And these are what we call the key price points. Like we said, the quarters theory had key price points on a number line. Well, these are the key price points on a number line, but this is using a Fibonacci sequence to be able to draw these. And we have a tool that draws these lines right together. And you can see we have a, you can, let me see if I can, here's a blue line. And this is it should be on a 15-minute. This is a 15-minute. And we have a drop down for different time frames for different types of charts. So I'm on a 15-minute chart. I'm going to use a 15-minute time frame. And we're going to draw some zones here where you see where we have a blue line. Now I'm going to draw this and make this a 15-minute blue. And we have another blue line down there. So I'm going to mark these lines. This is a 15-minute blue. And then I have a red and a green line. Now this is basically doing the same thing that drawing the Fibonacci's by hand are, only this gives us fixed points on a number line. And this is what oftentimes I'll refer to these as the institutional levels, because most of the time the institutions, they just have numbers on a line that they say, this is where we're going to try and buy, this is where we're going to try and sell. And that's how they maneuver throughout their trading days. They're not looking at a lot of different lines and things like, they just know there's certain price points. And I think Brian can confirm that for me, being that he used to use those numbers. And so these are just these are just key points. These are just key points. And you'll see how they kind of line up together, not always exactly, because the numbers, because there is still that human factor of how people are trading. It's a 50-minute red. And it's really kind of like it's sort of like a personal preference as to how you want to trade. But you can see, like on this Aussie US dollar, how you can see how it's respecting these zones. And so a lot of times what we'll do, and Brian and I were talking about this just yesterday, we'll take these 15-minute zones. I'm just go ahead and lock those in so I don't remove them. And then we'll take a regular Fibonacci tool, and draw in between our levels in between here. So what we're really doing is we're finding the higher time frame. We're trying to find where the ranges are. And again, the key for me is I want to make sure these are my target zones. We have the price goes up to an area of the upper 25%, comes down to lower 25%, or in this case, probably a third. And then it goes and it resorts back to the middle. It's like the middle is like a magnet. And so this is, so when you have these zones are high enough, and let's say that's 8 to these are 7, these come out to pretty much almost exactly 7 pips in between, which is the range that I'm looking for. And you can see that right now the price is pretty much, now we had a little bit of a wick down below here, came right up here and tagged it. So these levels are just as valuable and just as valid as the levels as if we were to draw it. Whoops, let me do that. As if we were to draw it right point to point. It still gives us, and if you can draw, even if you draw point to point, you'll still see that there are going to be other levels that are going to fall right in between where you can see price action. And let me show you where I'm talking about here. If let's say I draw it right from point to point, I said normally I would be, if I didn't have these, the screen and the red and the blue lines here, I would be using this point and I'd be using that point. But you can see on this how it still fits inside this range in this box. And then if I, and each with these green, red, and blue lines, if I can take it down to another time frame into the, like a 5-minute time frame using the same pattern, you'll see I've got the group, it can't take too long. You'll still see I have the, take this off here. You'll see that in between the green, the red, I have a green and a red. So basically this is like a blue line. This would be the green, red, and another blue. So what it does, it divides this one into thirds. And you can see how, again, the prices are respecting these Fibonacci lines. Like I said, these are pre-calculated on the chart, doesn't change anything. Whatever the price is between between $1 and a $2 range, this is what it's going to draw. It doesn't respect, the prices respect the lines, but the lines are drawn no matter what the price does. So there's two different methods of doing this. One's almost a little bit easier because you have, okay, prices in between these zones. I can draw my Fibonacci lines, and okay, now I've got my other target points, and now I know that when it comes out of that certain range, I can start looking for a price pattern where it gives me that strong move down, the retrace, get in, go to the next target, just like we normally do. So these are two different methods. And I was stroking last night trying to think of which is the better way to go. And I've come to the conclusion it's really personal preference. One, if you have the tool or if you don't have the tool. The way we've been teaching all along is that we've been teaching without having this tool on the on the MT4 platform, because that's what most of us are working with here. So that's just a little bit of background on how we've been drawing these things. But if you just look for where the price is, look where the previous significant high was, and usually I'll go back to the day before. Here's my day break. What was the price action the day before? Well, there was a pivot high here, a pivot low here, and the price is in between yesterday's range. If the price is in between yesterday's range, I'm okay with using that range, provided this gives me enough room in between my target zones to be able to take the trades. Any questions, comments about that? Brian, Eva, do you have any questions or comments about that?
No, I'm good. I'm good.
No, basically, for me, the lines are more of a where's price turned on a consistent historical basis. I used to manually draw these lines across, found out that there's a good amount of order inside the market chaos. But really what you're trading when you're trading is you're trading institutional numbers. Number one, you need to understand where the banks and institutions, like Al said, they don't just come up with a random, when we're talking currency, a 4-digit number. They have a price point, and we also are trading human nature and against algorithms and computer trading. So a lot of these Fibonacci lines are price points where we would expect either a delay or a response to. And you can historically go back and find, and I did it for, quite a while, where I manually drew the lines over and over and over again, using fib pools and then actually horizontal lines. And then I got to the point where it was taking so much time. And so having the fib plotter just sped up the process, and it made it a little bit more precise too, for me.
And you can see where with this thing, we had this range from here. This one overshot down at the bottom. This one undershot up here at the top, but it still was pretty much, for the most part, was within that range. And you can see where, as the middle third of our target zones, you can see where this is where all this stuff is. You can look and see this is where it's all going sideways. It's all going sideways in this middle zone between the pivot high and the pivot low. And that's why I like using this middle zone for when it gets to an extreme. When it comes out of the extreme, we're looking for it to come back into the middle. When it comes out of the extreme, it comes back into the middle. When it comes out of the extreme, it's going to work its way back down into the middle. When it's out at the bottom, this is our new range. It comes back into the middle. And you can see where it still has enough upward momentum to where it really hasn't broken the bottom third of this of our target zone. It just came up, it came back down this pullback, and it's going back up and retesting. And eventually this thing's going to come back down in the middle again. Once it gets all exhausted, and it's going to be looking, then it's going to break down, and it's going to be looking down at the bottom 25. But you can see that this little point right here isn't that, that's at, let's see, that's at 75.39 to 75.43. You're only looking at 4 pip. This is only about a 4 pip overshoot, which is about half of what the normal zones would be if you start breaking these things down. And if you take a notice where these zones are, some people may wonder, why do I use 7 pips? Well, there's a very good reason why I use 7 pips. Because if you measure the pip range between this 15 and this, between these major 15-minute fib lines, you're going to see that this is about 62 pip range, 61.2, 62 pips. If I divide that into thirds, which I did with this one and this one, this range is going to be about 21 pips between here and here. You've got about 21 pips. If you break this down into thirds again, into another thirds, which is where my 7 pips comes from, if I put this down into a 2-minute time frame, you're going to see that now these targets, these pips are 7 pips apart. So you have, between every 21 pip range, you've got 3 7-pip targets, and that's where you can look. And again, these are all thirds. This takes this zone, divides it by 3. The 5-minute takes this zone and divides it by 3. So it's really breaking it down into 7-pip segments, and that's why you can be looking at, like, that's where you can get where these 7-pip targets areas are. And it really does respect that 7 pips. And that's where this, you say, why did I randomly come up with seven pips? Well, that's it. I like 5 pips because sometimes of the spread, but that's where that comes from, just so you may know.
Another thing that this does for me, especially in the swing, if you're sitting in a trade for, a couple of days and you have no guide as to where the ebb and flow of the market's going to go, you have a nice move up and you're feeling real good. Then you have a pullback to some area that you have no idea about. And then you think, I need to get out of this. I need to move my stop. I need to move my target. I need to get out of this trade, only to see it bounce right back up to where you were, and the roller coaster of emotions that you go through. But if you have this fib plotter along with the retracement like we use it, then you already know where you're going to expect some sort of reaction. And when those are finally broken, then that's the time to get out. So it allowed me to be a lot more patient. I've been in trades for months because none of the fibs were broken. And Al is a little bit different trader, like we've talked about before. He does it a little bit different than I do, but I can stay in months because the rules aren't broken. Whereas before I was successful in trading, I didn't know where the price points would turn, or they would sit and lay low for a while and go sideways, and it would drive me nuts. So these gave me a bit, okay, here's some more odds enhancers. Here's the rules that it follows by. Until this breaks, I'm not doing anything. And I just basically set and forget for my swing trading.
Yeah, and if you can now, like right now, I just drew this box. This box is basically 7 pip range. If you take this box and you look at the overshoot of this bottom line, you can see the price it stayed within that overshoot area. And if I take this box and coming up to the bottom of the line, you can see where this price undershot that area. You can see where this where it's still respecting that 7 pip range between the undershoot or an overshoot. So if I have my 7 pip range box above the major lines for the overshoot, and if I have another, and I can look at the undershoot, this gives me basically a 14 pip range from the undershoot to the overshoot area of where of a flexibility of where these hard lines are. And then you can just see where you can see where they start bouncing. If it bounces off like this green zone, or like here it bounced off the blue line, you can just check and see it bounce off the blue line. And so you can see these without having to do all the drawing. you can just turn the tool on and you can just see where the price points fall in between. And a lot of times it goes from blue to blue, depending on what time frame you're looking at. Okay, so just trying to give you a little bit of a history lesson on where some of this stuff comes from and how we. But now, if you don't have that, your only recourse then is to be drawing these lines. But that's why I said when I draw the pivots, I look to see where the price is, and I'm going to see a significant pivot high and pivot low. Right, but now, right, this price right now is pretty much right below in here. Now, if I go to a higher time frame and see, can I find anything over on a higher time frame that may give me that if this breaks, where's it going to go? Then we'd be looking at this point. Now, this would be the move I'd be looking at. Still be respect. Then I would be looking at this whole range over here for my higher time frame trade range. And you can see that my range in between here is going to be 15 pips, which there again, that's, so now this is the playground it's living in between this area, between this upper 25%, which we use a 25% range, upper 25. And you see it came up, hit it, came out. Here's where our trend line, so we have our pivot high, a lower high, and then a rejection. Here's where the higher time frame trend lines begins, from up here to the hit, and then extended on out to wherever we need to go. Here's our lower pivot. Here's our, this is where we had the Fibonacci drawn before. Here's our lower, our higher time frame, lower trend line. And you can see it's coming in into the low area. Here's my lower 25%. So here's my lower 25% in this area. And so now we know that as it's coming into, and we can see with the arrows talked to, which is really kind of nice. It gives us these little zones saying, okay, it's got a wall here it's got to get through if it's going to go lower. If it breaks through this, we know it's going to be going down to this one. Here's a strong move up. Here's a retracement. So if this thing breaks, it's coming over here. Here's a rally, a little bit of a basing area, rallies again, comes back and retests this area. And if I draw this fib line, draw this our box over here, if I take this box and put it right over into this area, you can see it's coming right into where that basing was, where the price has been respected this before. And that's all we're really trying to do, is we're trying to draw the areas where price has memory, and it comes back to where it last took off. So here's where the sellers or the buyers came in, sellers brought it down, the buyers took it back up again. Sellers bring it back down, buyers take it back up again. And so this is a very significant level. So we're just going to hold that level. And this is the area that if you want to take it long, you take it into this area, but your stop is down here, because if this holds and this holds and this doesn't hold, you get stopped out. But now you can reverse your position, go for this target, because once all the sellers or buyers are chewed up in this area, the next level of buyers is going to be down here at this next green zone. But if the buyers can come back in again, it's going to come back in and draw it on up into probably this trend line up here. And so that becomes your new playground, your new range. Does that help make things clear, or does it just confuse things for anybody? I need a little feedback on that. No, any words?
Well, Daniela thinks it's interesting, and it's clear to her as well.
I just don't want to make things more confusing than sometimes things already are. And what I think is clear to me oftentimes doesn't always hold true to everybody else. So, we're just trying to be, but like right now,
your brain.
So these are my targets. This is my upper 25. This is my lower 25. I can use this reference. I've got the range in between these. I've got a nice little range of 15 pips in between, 15 to 17 pips. Nice little target zones. Because I'm looking for 7 pip profits and 7 pip targets. So these become my target zones.
Hey, Al.
Yes.
Can you show me your your strength tool, your Hercules tool again?
Sure.
Just curious on something real quick. Let me get this out of the way.
The Hercules.
Yeah, I'm looking at pound
OCS.
yen. Yeah, I'm looking at pound yen.
Whoops.
And there's a reason. I just took a trade short on pound yen. And this is what I was going to.
You took a short. Okay. Yeah.
I took a short on pound yen on a 15-minute chart. And this is where Al, myself, and Eva come in, and we all see things a little bit differently. So looking at the pound yen, looking at the Hercules tool, it shows that we should be short. I cleared off of my 15-minute chart and just put my moving averages on. I don't have I have an arrow type thing tool up, but I have my fib numbers, and I did something that is considered aggressive. I took it on the lower third, a short on a lower third, which is normally not the best result to do, but it gives you I'm sorry, are you looking at it now?
Yeah,
that's it.
Pound yen.
On a 15-minute chart. Yeah, I'm in it.
Yep.
I was in it right at, let's see, my entry is 153.92. And so what I'm looking for is at 7 pips. And this is where Al and I have been talking, where we're not necessarily trading trend. We're trading momentum. And there's a difference, because if you look at the pound yen, overall, it's a long position on a higher time frame. But if you look at what's happened and look at candle structure, 1, 2, 3, 4, 5, 6 over the last 6 candles on 15-minute chart, you can see that the momentum is down. And technically, even if you look even further back, when the crossing happened overnight, right there, we go to your crossing of all those lines right in the middle of all that mess. That's further back. It would be your crossing actually happened at midnight.
I'm trying to get my zones up here so people can see it. The tool doesn't have, it's very faint. You can see it on my chart, but you may not be able to see it very easily. I'm just trying to, these are my 15-minute zone. And you can see, like right now, as we're talking about this, we're talking about right now, this is our 15-minute zone. This is going to be, now the yen pair is a little bit different because of the value of the yen. So that makes things a little bit tougher to see. Rather than being 62 in between, that's 54 pips in between. Still within the range. But you can see that here's where it's ranging in between. And so if I draw my Fibonacci lines off of this, this is kind of a good example.
Yeah, this is what it fits a couple of parameters of what we do in our trading. It's aggressive trade for me. Because it's in the lower third. Taking a short in the lower third is not normally a great option, because you're getting into a point where historically you're coming into the place where in a short case, you're coming to a place where a reversal is expected. Not that it won't happen. It doesn't mean it won't blast through, but historically, especially on this one, if you look back, I guess that would have been June 24th at 8, that would be your 9, where a big pivot low was. My target is just right where that same. Yeah, I think that's way. Yeah, my target is a little further back, Al. Right there. There's your pivot low. My target is just ahead of that. And so, again, taking a short in the lower third is not necessarily smart. And that was kind of what I wanted. I'm an aggressive trader, so I don't expect anybody to understand my brain, but I'm willing to look at the candle strength, the momentum of it, and do it. But there's some parameters that we're going to lay out and kind of foundational rules that you guys will be able to use if you so choose to do so, that explain what's going in our head for foundational. Well, if I didn't have any of these tools in front of me, I would still taken this short. I still would have, because of the momentum on it. However, with the tools, and remember, Al and I were talking about this yesterday. Most of the time in trading, you're trying to talk yourself out of a trade, or really talking yourself into it. You don't want to take every trade. So you want to have your odds enhancers in place right in front of you. Okay, so this doesn't meet that parameter, knock it off, go to the next one. Because if you can get to the habit of not taking every trade, you'll find that you're successful. That's the problem with most new traders. They see a trade, oh, there it is, I got to take it. And then when they get busted on it, they go, well, that didn't work out. And they get frustrated. You get that over a year. You do that for a year, 2 years, then you'll stop, because 50-50 is no fun. So in this regard, with this particular one, I remember seeing early on when we saw the chart of the Hercules, the currency strength, that the pound yen was opposite. So I knew that at least on that one chart, over across the board, the Hercules was showing that the momentum was down. Had I not had fib numbers there, I would have been in. However, looking at it now, I realize now that this trade is aggressive. So if it goes wrong, I accept the loss. It is what it is. I went ahead and took an aggressive stance, an aggressive entry short, and it's going to do what it's going to do at this point. And I don't move things around. I just saw that earlier. It was not an arrow or anything like that.
Yeah, but you can see now this is that RCS, that the strength mirror that we talked about. This shows basically that the let's see the color, which is British yen, the British pound. The British is the purple one. That's the 2. The yen is the 5. We do have our 3-point spread. Now this is on a 5-minute chart. You can push this to a 1-minute chart, and you'll still probably have the spread. But we're also seeing that where we had this, it came. Now this is what we're looking at for the reversal, where it came into our 25% zone, came back out, came back in, gave us our little. See, even though with this saying that it's right. See, right now on the 1-minute chart, you can see where it flipped.
It's flipped.
So this tells me that the British pound is now starting to get more strength to the Japanese yen. And we did have, so we came into our 25%, pulled back out, came back, gave us our little, our higher low right here for our little wedge. We have another little, let's see, mark that. And now now we have the 5 crossing the moving average. I'd be willing to take this thing long up to this point, because now I know that this point up here is going to be, well, let's see, that's at 97, 98. Prices at night. I've got 7 pips to the upside, and we've got the crossover, and everything's starting to change over. Once we get this candle crossing over through my moving average, I'm probably going and take this trade here. Let me go back over to my chart.
I would tell you on a 5-minute chart, you had a penetration of the 23%. About golly, when was that? And we made and that was back 30 candles ago. It retraced back to the 61. I'm expecting this to it went a little deeper into the 23. I'm not expecting it to get to the 61, but as Al's saying he's going to go long, I would expect it to get to the 50% way, but I'll still be short, because what I'm seeing with my tools is I have a level of supply that were formed at the 38 and the 50. So I have a pretty good wall. I may have to wait a little bit for this to work out, because we are making lower lows. The question will be is, do we make a lower high? But that's for trend analysis. We're talking momentum at this point.
Right. So right now with my overall range, right now I'm looking at this pivot high, this pivot low. Now, without those other tools that we're talking about, this is where I'm drawing it. I'm going to check to make sure I've got the range here. Let me see if I have the range here between here and here. That's about 4 pips. That's a little bit tight. Let's see here. Let me go to a higher time frame zone.
And remember, while he's drawing that, when we talk about the lower 23%, the next line on the 5-minute chart is a blue line, which is what we consider a wall. So we're approaching a wall of potential rejection back for the long side. And remember, we're trading momentum, not trend, because if you look at this thing on a daily or a higher time frame, you'll see that this isn't an uptrend, and this is just a pullback.
Now, if I look to see where the price is right now, I can see there's a pivot low over here. There's absolutely no reason at all why I can't be using this range right here from this low. This is a strong move up, and then it came back down again. So I can slide this over from my higher time frame zone all the way over to here. Draw my lower and upper 25% range, because this is the lower 25. Let's see where to go here.
You're on Aussie US, by the way.
Oh, I switched charts here somehow. British, what's that? What did
I was thinking, man, why am I short?
Let's see. We're
was
looking.
thinking-
What chart? We're looking at
I'm
the
on a 5-minute
British.
pound yen.
There's a pound. There we go. Somebody clicked the wrong one here.
And there's
So
your
right
demand
now,
zone. Yeah. You're sitting in the demand zone.
So here's my. So we're going to draw our shapes and our rectangles here. So here's our. This is where this thing started. Coming back over. Here's the lower zone right there. Here's my target. Here's my 38. This is my mid-range targets. This is where I want to see it go when it comes out of that lower zone.
Now it's going to be a grind for him to go long all the way up to the 154.04 area. It's going to be a grind.
But in the same token, as I go to the 1 minute chart, as you never did come out of the 25% zone because I drew that range a little bit differently.
My 23 zone is a 153.89, which we're just at that. We're just below that. Is that where your 23 is at?
The 23
on your
again.
I pull retracement from fib line to fib line. So my 23% zone on the bottom is at 153.89. So we're sitting on that right now. We're just below it. So it hadn't come out of that bottom third for me.
Yeah, and actually when I first looked at this, I was using this pivot high, this pivot low. So basically, if I were to, I've got my zone set here, but now I'm going to be looking at something else here. I'm going to go to my objects. I'm going to take that fib line off because this is my higher time frame. Now I'm looking at how from this move here down came back up and retested. So this is the other. Let's see. Let me get these strips off here because I had two of them on there. Delete this one. There we go. So now this is now we've got this is the higher time frame, but now here's the lower time frame fib that I'm looking at. So I use two. One's a higher time frame, one's a lower time frame. Here's the new range that we're looking at for as it came back into this 25% zone. You can see from this range, it came out of the lower 25 because that's this area right in here. It came out of it, came back and retested it, and now it's looking to head on up. Now, my first target is probably going to be only, see, did I get enough? That was been my entry there. See, you can with this area right here, that's 6 pips. So where am I at here with the trade here?
We're actually on a 1 minute chart. We formed a wedge.
Yeah.
And that's what's happening. You have a ascending wedge. The potential, rumors have it. Ascending means you're going to go down. I don't necessarily believe that. I think ascending can go up or down. All depends on where the momentum's at. But we're consolidating right now, so we're waiting for everybody to catch up.
And you can see, like, here's the high. Here's a pivot high. Here's a hit. Here's a hit. And this is support. So right now it's basically inside here. What I'm doing is I'm looking for this thing to be turning around. Now the yen was strong. Now I probably was a little bit premature with this, but honestly, because if you can see, like right now the yen was strong. Remember the purple one is the British pound. The yen. So now these two are pretty much right back neck to neck. If I look at my, where's my? You can see that the yen is losing some strength. It was all the way up here at the top. Now it's losing some strength. The British pound is picking up a little bit of strength over here. It's still pretty much buried on the bottom. So the British pound is still relatively weak to the yen on the higher time frames, but it is starting to show some weakness.
Al, how do you know which chart is which?
What these are?
Yeah, how do you know which? I mean, I'm looking at the upper left. What is that?
Oh,
how do you?
Well, the upper left, that's 1 hour. That's 1 hour. If I click on the chart, there's 1 hour. If I click on this chart, that's 30 minutes.
Okay, I see what you're doing. Okay.
If I click on this one, it's 15, and then this one is a 5. So I got 1 hour, 30, 15, and 5.
Remember what I said when we talked about I bet you if he pulled in a daily of that, you'd see that the pound yen is a strong trend up. So I think this is just a short term pullback in the big picture.
But it is in this higher time frame, lower 25%. The shaded area is the higher time frame, 25% area. I never really did get out of that. So I was premature, a little bit aggressive with trying to get that. But now if it breaks this pivot, I'll be out of this trade. So I'm going to check to make sure my stop is in there.
So in essence, I will be taking your money.
Or I take yours.
If you go long and you win, then you take mine. Because that's the one of the things I do teach my fourth graders is that when somebody wins, somebody else is losing. There is no two winners on this thing.
You see, by 50.
What was that, Eva?
There's a question for you in the Q&A from Daniela.
Okay.
It'd be easier for you to read it, I think.
Let me see. Let me go over there. Pull that out.
You can see right now, I'm looking at this. Just one real quick thing. This pivot if this pivot gets broken, then all bets are off. My stop is all the way down here. But if this thing breaks and closes below this pivot line, then I will be out of this trade. Meanwhile, I'm looking at it. So I've got all in all, even though my stop is down here, my visual stop is right in here. So I'm keeping it out of the broker's area, so the brokers aren't going to go and take me out. But if this thing comes down and closes below this green zone, I'll just form another green zone here, and my target's going to be on up just to the top of where this thing gets out of here. So go ahead.
So can I share my screen then, Al?
Yeah. I'll stop sharing.
I'll show you what I'm doing.
I want to find out how to stop.
I did it. I got it for you. Oop. Try that again. This hopefully will answer the question. Okay, so what I do, I'll get rid of this. I went on my 15-minute chart. It's not much different than Al's overall look. You can see where I got in. All my momentum. These colors are not anything. They're my supply and demand tool. It has nothing to do with arrow. But you'll notice this blue line. That's the blue line I was talking about, the fib numbers that are automatically placed. And so when we squish this thing up, you'll see red here, blue, green, red, and there's a blue up there. But what I like to see is if you look where price seem to always want to waver, the red line, where you see price seem to waver, even historically back, is this green line. Doesn't mean we're going to get a big reaction. Doesn't mean it's not going to overshoot, but we're usually going to get a hesitation or a reaction from it somewhere. Same thing with this. We had a pop off the red. We hesitated here. We went a little further back. We retested the green. We moved all the way down to blue, and then we moved back up to the green. We hesitated. Then we broke down again. So we use these fib lines not as a place to enter, but just to kind of give our eye a place where we can expect some sort of hesitation. Now, I do things a little bit different than Al. He likes to do the retracement by a pivot high or pivot low. I'm lazy when it comes to this. I like to work fast. So what I do is I just, instead of using a high low, I pick my fib number and I pull a retracement tool from my fib number to my, that's pretty close, fib number to my other fib line, and it gives me my playground. And so when I come in here, I am OCD, so I have to straighten this thing up. And this is what slows me down. This is why I love the tool, because I'm a perfectionist. So what it tells me is this. Up here is really where I want to be short, but it's already happened. Okay. Down here, I'm looking for, like Al was looking for, a bounce because it's in the lower 23%. So as I was showing him yesterday, and I do all my drawing on a 15-minute chart, and then I go down to a lower time frame. So if I'm really looking at what we're trying to do here, this keeps me out of problems. If I come in here and I put a box right here, and I know that I want to be a buyer or potential buyer, I make it green. And I do this for visual. This is not going to make my trade successful or not. But it gives me my visual of what I want to see. In a perfect world, I want to be short up here and I want to be long here. But as Al was talking about, he was saying this is where the meat of the trades are. And he wants this range. This is where he wants to get in. I'm betting he would have been short right here, right as soon as it broke the 76. If everything was in play on the M1, the minute one chart, I bet you he'd have been short here already and already out of it. I jumped in. Yeah, I jumped in at an aggressive place because I jumped in just outside the 23. When I got in, Daniela, I got in at the 23. I'm in a lower third. Look what's down here, a big blue line. Now, there's no supply and demand that's identified. So I've got room, but I know historically that this blue line is risky. So I may have to wait this out. And remember, on the big side of the things, the overall trend for the pound yen on a higher time frame is up. So I am even in a more risk. Doesn't mean it won't work out, but I'm really playing momentum, not trend. So when I take all my drawings and I drop them down, and I'm not a big 1 minute fan, but Al's kind of converting me. And I go into this gives me my playground in a zoomed in piece. Now, what I was telling Al is that I was going to take his money is because if he was long, he has all this to go through. My stop's way up here. Now, on a 1 minute chart, that looks like a long ways away. It's 17 pips. I wanted it above the 61 because I thought if it did retrace, it's going to come to at least 50. That's where I'm going to get out manually. But you can tell in the scheme of things, I'm also, my target is right before here. So my bet is I'm going to probably close this out. I probably should bring this up just a tad because I know that we're going to get into a demand area that's going to be wanting to reject it because number one, we got a nice demand zone here and we have a blue line. The last time we got close to here, it popped back up and it can very well do the same thing. Now this green area was demand and now it's gone because the candle closed. So I'm going to leave it alone, let it be. I'm definitely going to bring this down to this area now because we went further. There's no reason to lose money if it happens to reverse. And now my trade's set on a 1 minute chart. But notice I'm going short inside of the green. I was just barely outside. So it is a little bit risky. That's what I mean, the lower 23. And the same thing applies in the upper 76. This would be if I really wanted to be short and everything was perfect, this is where I want to be short at the 61. Even the 38 is not bad. But everything comes into order. And that's how, hopefully that explained a little bit of what you were asking me about. And I'll turn it back over to you, Al.
Okay. And share my screen, and we'll go back over here and see what we got. And we'll see what we're looking at back on the, it seems not working real well for me. They said, now one thing is, remember we were saying too, is that on the higher time frames with that, again, this is kind of a little bit why you don't just jump into trades, is that we're still looking that the yen is still stronger than the British pound. So that means it's still going to have the strength to the downside. And one thing I've said over and over again, this is where I kind of just broke my own rule, where I said, I don't want to be trading against the yen, which is what I'd be doing because the yen is a pound yen. So the yen is the stronger one. Yen is the second currency of the pair. It's got more strength to the downside. So I really was going contra trend. Now, what I was looking at was for this bounce, but this thing still could cut. I mean, it could still work out, but this is why Brian was probably okay taking a short. I don't like taking a short in an area where until it breaks through. If it breaks through, then I'm going to reverse position, and then my target's going to be pretty much down here where I got into this trade. But here's if I remove all these fib tools, let me reload this whole chart here. And so right now we have all, again, this is where, this is what you call a trading error, is that all my moving averages are in the right direction to go short. The strength meter, the yen was stronger than the pound. It says to go short. What that's telling me is that this low zone here is going to break, but I'm just going to pull this thing off because this is not working right. Now, if this thing breaks through here, now I've got the next area. I've got lots of room to the downside. From this move push down, I've got room to the downside to take this thing short. In fact, I'm just going to do that because I think this thing's going to break through. There's lots of room down here. And there it goes. And so
I'm now out of the trade. My trade's profitable and done.
Yeah, he's already done.
Yep. And now we're hitting the blue line, so I would expect some sort of reaction here shortly.
Now, what price is your blue line at?
153.76.
153.76. That's right, baby.
Right where we're at now, where it's just now bouncing.
Which is right about 53.70. 6 is the blue line.
2 pips lower.
I'm not a
3
big
pips
fan
lower.
of the. I'm not.
There you
up
go.
There.
That's it. And it's bouncing off of that right now. Of course, you're looking at a 30-minute chart, so you don't see it on a 1 minute like I am.
Then the 7 pip overshoot of this would be 153.70. Well, 153.70.
69.
Basically, right here, the bottom of the zone is right here at 153.71. This green zone.
And it's funny you say that, because I'm looking at my supply and demand tool, which is set to a really strong level, extra strong. And there's a nice demand zone all the way from 153.72 to 68, a 4 pip zone, which is that overshoot that you're talking about.
Yeah. So like this is really this, the fact that this broke through here, this is the range I like. Let me see what the range of this is. That's a 26 pip range. If this thing breaks through this green zone, it's going to, looks like it's got the area is the next 20 area. Well, right now we're coming right into this 23% area. It's lower 23. Right, it's basically, and that price is right at the 60 area. If it gets all the way down to this 23%, if it comes into this 23% area, I'll be out of this trade. Let's see. I'll go to my 1 minute chart and see where we're at. Here's my zone. We'll see if it can get a bounce. This is why I say don't trade against the momentum of this correlated tool that we have. This thing is especially when you see the yen is strong on all different time frames. Now, on the lower time frame, you'll see it oftentimes switch on the retracement, which is what it was starting to do. And I was looking at that as being the bounce, but it just kept on coming down. Once it switches back over, now you're in the right direction again.
I was going to share my screen and show something that kind of reiterates what you said, Al. You want me to do that?
Okay. All right, let me
show this screen, show you a rule that we talk about. Let me go over here and share it wherever you guys are. This may help kind of give you, we talk about, there we go. You see it now?
Yep.
We talk about contingencies. Al and I are putting together a financial plan that's foundational, but as you go through trading, you get your experience, there's something that always comes up in trading, always. Well, what happens when this happens? Well, what are you going to do when this happens? And that's part of the process when we're in a busy day. You know, when you're trading everything but Friday, Al will make a decision. I want to do this. And he goes through the process in his brain already. Excuse me, but not everybody knows what his brain's doing. I've been around him for 6-7 years now. Most of the time I can figure out what he's going to do. But there's times I'm going, why would you do that? Well, in his experience, he's found different things. So one of the rules that I found to be a contingent for me, and he talked about the overshoot. Remember, here's our blue line, and we expected 7 to 10, you know, anywhere from 2 to 10 pip overshoot. Well, I have a demand zone that just was hit. One of the contingency factors, if I'm looking to be long, is I go to the next zone below, and this area that was red up here is green initially. And this is the most conservative place right now to go long, because remember, we wanted to be long in here if we believed that the pair was going to go up. But what if I'd have gone long here? I would already be making halfway to my point, because this is an area. Now, once it breaks below here, this flips back to red. Once this line's broken, it's not a buy area any longer. But that's another contingency, that when we have those overshoots, most of the times those little overshoots are the most conservative areas to enter. If you, in a case for this, be long. If everything's telling you to be long, to me, this is the line in the sand, the most conservative entries on the other side where it overshoots, because we can't do a precision entry. There's no way we're going to say that 153.76 exactly is where everything's going to stop at. but this is a good example. We had a nice little level on a level here. It came into this. This is still a green area to be a buyer if you were looking to be buying. I'm not. And the momentum for me is still down. But you can see we're going to be sideways regardless, because this is a 1 minute chart. Let's pop this up to 5 and see what we got. But having some contingency factors of how you, because I'm a pretty aggressive trader. There was no demand zone here, but I could have taken it right here because this is a buy area. There's nothing telling me I should. But once the picture will start changing down here. It'll give you ideas. Okay, we've had a strong move up. We'll create new highs and lows and pivots and things that we can, but we really are pivoting from the 38. Because if I drew a line across this, it's almost exactly the 38 line. This line here is the line of contention, which is 154. And remember, if you're studying pairs, yen pairs like to hold numbers and quarters. 154 is going to be a key number. So you could take a long down here and ride it before you get to the 154. That would be logical to do. You have everything. That's a counter trend, but a counter momentum in this case. But I was just saying that's a contingency factor that I have. I use this same identical thing for swing trading. This exactly the same look is what I use on every time frame. It doesn't matter what time frame I'm using. The difference is how long do I want to be in the trade? Does that help at all, Al, with the overshoot stuff?
Yeah, it does.
Just the contingency.
I think is when you're getting the pressure coming down, you still wait for that reversal pattern that we've been teaching and talking about. Is you wait for the reversal pattern, you get the moving average crossovers on the 1 minute, and then you say, okay, now you can take another look for that other retracement back. We get that little momentum or that little trend line that we draw to show that, okay, we hit the bottom. You get the candle formation says it hit the buyers coming in, and then it had the retracement, get more buyers come in, and then it takes off. You're still looking for that same reversal pattern, but once you're down here, you're starting to look for it. Rather than actually, I'm already out of my trade here because it could go even lower, but I wasn't able to watch it as we were watching what Brian was doing. But you're still looking for that reversal pattern in the zones where you're expecting the reversal, and then you take your shot at it, and then you go for where the last area where it was the contingency was, where the strength was.
Now, again, the other contingency is I could still, like I've just put the color bar there, I could take it short. There's nothing saying I can't go short still, because now I'm high in this third. But if I'm really looking for the long, which I'm not, I'm thinking this is going to go down. I think it's going to go down to 61. But what I would be looking better trade, instead of being aggressive and jumping in it now, is wait for it to close below here, bounce back up into this area, and then take it short. I would love for it to go below the 153.63, bounce maybe even to the 61. And if all the pictures, all the strength meters, all the momentum meters, and all the lines, everything that we use as our odds enhancers are still in the same formation, then take it short. Because you got a lot of clean air on this 15-minute chart down here. A lot of clean air. But this one's the diamond right here for a long. It's at the bottom. And you're right on a line.
You can see it's just right now it's coming into that lower 23% area that we were talking about, where I'm going to be expected to come penetrate into that, do this little thing for a while, come back out of that 23%, come back in, retest it. But right now, it still has lots of room to the downside.
I'm going to get rid of these colors so y'all can already figure that out now. Just a visual.
So you're still sharing your screen, right?
Yeah, you want me? I can stop here.
No, that's okay. I'm just kind of watching this thing on my. Yeah, it's just now coming into that that lower 23% zone that we were talking about. So, but there again, this was actually turning out to be a very nice trade. Even though I reversed my position, it still had the room to where I got in to be able to catch that another 20 pips to the downside. Now, you'll probably start getting a bounce off of this lower 25, but that doesn't mean it's not going to go penetrate into it. Actually, is anybody sharing right now? I'm not sure.
I am.
Okay.
I would love to be possibly going short again. What's our strength meter, our momentum meter saying to us?
Let me see. Let me get that here. It is saying that the yen on a 30-minute chart, or On the 30-minute chart, we have the yen at 5 and the British pound at 0. And on the 15, it's a 5 and a 0. And then on the 5-minute, it's a 5 and a 1. So basically, there's no reason to. This would be one of those that you could probably stay into this trade a little bit longer still.
Yeah,
You'll probably get a bounce. You'll probably get a bounce off that lower zone.
Notice I just put a set and forget. If it comes up to that yellow area, am I sharing my screen?
I think so.
Okay.
I'm not.
I put a yellow. I put a set and forget just to see what happens because I see a bounce off of where I expected it. Now I'm in the trade again, but I'm short again. And I'm not having to go very far to get my my target on this one. But I have a feeling this is where we expected to bounce. Where did it bounce from? It bounced exactly from the 76. Yes, we had an overshoot, but it couldn't close below. This is my bounce. I think we could very well go up into this area again, which means I could get stopped out, which is okay. And I could move my stop all the way above here, but that's more of a swing trade. That's more of a day trading instead of scalping. So I'm sticking with my 15, and we'll see what happens. I would like for the momentum to slow down a little bit, but we'll see.
Right now, I can't even find out where you are. I've lost your screen completely, Brian.
I'm in Texas right now.
I can't find your screen. I can't find anything right now.
We need Connor. I need to hear a sell, 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 or crying something. My only concern is we created a demand level right where my target's at, which is on a 1-minute chart, you're going to do that. This candle needs to close just like it's closing now with no wick on the bottom.
Edens is telling us he took the pound yen short and he caught 25 pips on it.
Very good.
Thank
That's what it's about. You got a little more patience on your day trading than I do if you're riding it. I do that a lot with my swing, but I don't do it very often. I pretty much know with my style and how I am emotionally, get my 7 pips and get out because I'm so aggressive that I end up making mistakes. We need this thing to close real quick. This is nice for me. There you go. Now move on down just a little bit more. Don't need a whole lot more. But see how we talked about it breaking down below the blue, and look where it came right back to the blue line. And again, you can't make this up. That's automatically plotted for you. That's not me putting a line there prior to. Sometimes it's right on the button like this time. That doesn't mean it's going to work. Dadgummit, there we go. And I profited again. So I've made my 4% for the day. I'm done if in live trading. And that will clear out once this candle's done. This green zone will be gone. It will not even be there anymore. So really the momentum is down at this point. So I'd go back. And
on the 1-minute chart, you have a 7-1 split right now on the 1-minute chart.
So we got a little bit more movement, but I think we're coming into a more of a wall. Now, the question is would I do this trade again? Absolutely. If it's going to rebound back and forth between this 53.76 and the 53.63, why not? I mean, if you see that happening, I think that could very well happen. I think we just now touched our, what we're reacting to is this demand zone that was created. Now, I don't know if y'all have arrow showing a demand zone where mine is, but this tool right here was a proprietary tool that was created for us. And I have the settings on extremely strong and only a 2-candle base. That means I'm looking for, when these are drawn, that means it had a strong move out of that area and only 2 candles in a basing. So it didn't stay there very long. Bright pink has never been back there. Bright green has never been back there. This light green, I mean, it's barely touched. You can see it's been barely touched. And we're having the same reaction we had just a second ago. It's the same identical one. The question is, and we are probably setting up a wedge. The question will be is, what's that going to look like? Yeah, we come right down to the bottom, and that zone is very strong. That was on a 15-minute. This is a 5-minute zone right on top of the 15 minutes, so it's very strong. That doesn't mean it won't be penetrated, but it's going to take a little while, and I would imagine we have some sort of technical pattern developing where we consolidate them. Because usually we go from third to third, but I look at this as again, it goes back to what Al was saying before. Basically what our fib tools do for us is tell us when we expect the hesitation. So if I were to pull this over, if I didn't have this here at all, and I didn't have these tools here to tell me, where can I expect price to change? If I didn't have these things, I would be freaking out every time it had a bounce move on a 1 minute chart, 5 minute chart, because it moves so much faster. I'd be trying to get in. I would be emotional wreck. But if I come in here and I pull and this is just one way of doing it. You can do it manually if you want. If I pull my lines in, then look where my zone's at. 6150. I can expect a hesitation there. 38. I can expect a hesitation. Now this one's a little bit weird. This one's off. It's in the middle of no man's land. But look at this one right there on the 0. So I can expect 1, 2, 3 to historically be a place where price will hesitate. So I can say if I'm short and it starts hesitating here, I'm not freaking out yet. If everything else is in order. Right now, everything else is still in order. The key is to make trading simple. And Al and I are trying to build a written trade plan to keep the foundational simple for you guys. Because you can get real complicated. I remember jumping in a room with Al a number of years back, and I was lost as ball in high grass. I had no idea what was on their charts because of all the stuff. And I'm very, very clean. I like clean stuff. Al's definitely more technical than I am. I'm definitely more visual. He's the math guy. He can give you the numbers. This is why this happens, and that's why the community hears. And then you got the female perspective, which
Thanks.
Well, I'm telling you,
we
our
rely
best
on
traders.
Eva keeps us straight all the time. She's always saying, "Well,
it's the truth." I'm telling you,
it is the truth. Yes,
historically, and data proves that females are better traders than males are, and that's because they're not overloaded with testosterone, and most of them are not so highly competitive that they can't handle a loss. They go, oh, we lose, we get the next one. So if all the females in this room, all it does is take a little bit more time and practice, and you will be better than the males because you don't have all that ego that gets in the way. And it does get in the way. We've had traders in our BK2 trading room, we've had traders who actually have told me that I'm trading wrong because I'm not following the rules. And Al and I laugh about it because I've had 3 years of profit in my swing trading. 4 years now. But this guy was so adamant that I was doing it wrong. And I asked him how many times how many months consecutive has he been profitable? He says, well, 2 at the most. And I'm thinking, here's a guy who's caught up in his head. He has a certain way. He's got to do it that way. And because of his ego, he doesn't want to be wrong. And ego is not necessarily a bad thing, but
one thing we talk about is that the emotions of trading is one of the hardest things to overcome. Is that we call the BTE indicator, that the indicator between the ears indicator, and you've got to be able to get that working for you. And everybody has it, everybody gets it. It's a free indicator, but you're the only one that can control it.
We've had people want to buy it.
We had people want to buy it. Yeah,
they thought it was a real indicator. Yeah. You come into this room every day and you'll get that.
Yeah.
So what I'm seeing here, Al, on a 1 minute chart. And again, this is
a little wedge there.
Yeah, this is the way I see it. Doesn't mean it's the way everybody sees it.
How many pips below that blue line has it gone down? Can you measure that out?
73 down to this pivot low?
Yeah.
What's that? That's 17 pips.
17 pips.
Uh-huh.
So about another 4 pips will be another one of those 2 zones, one of the
exactly 21.
21. And
That's what I said.
And you got the bounce at 17, halfway between the 21.
This is the wall. Again, why if I'm going to be long or short on this, I may even come into like that now. I'm looking at how that plays out across. That would be my entry potential at this point for a short. Basically on top of
your line right where it is right now. That's that first pivot low below that break below. How many pips was that?
Which line?
From the first pivot low below the first pivot below the blue line. When it broke the blue line, that one right there,
here.
how many pips is that?
That is 5.
5 pips, okay.
Uh-huh.
Within that 7 pip zone, and then it came back up and was rejected.
Which is another place, would have been another place to get in. I could have done this twice. Break, blump, 1, and then do it again here, bump. But this was more confirmed. This is definitely a much more. And then I would take a short right here. I would have done it on the close.
Actually, it looks like it's going into that the next 21 pip zone below that blue line, which means you could be starting to actually go into the next blue to blue range below.
Mm-hmm.
So you could have a blue, then the next there should be a red line below the blue. Well, there it is. It's down there.
So when we slide this over and we look where our supply and demand tool has dropped some, and these are similar to arrow. It's not exactly the arrow. We can see that this is going to be the problem. Now, this is where I'd get in again short. It's now broke my wedge, touched my wedge. And now if I wanted to, and I'll go ahead and do it on a demo, I'll go ahead and put a market order short. I'll take a small position on this just to see what happens, just so we have something to look at. Okay, so I like it. I like the way it looks. I got my stop way up here above the blue over the overshoot. We got my target here.
Now watch what those moving averages, those 5 and 13 moving averages are doing out on this pullback.
I would expect, since we're on a 1 minute chart, the green may cross over.
But you also have the arrow moving average coming, well, that blue moving average coming down.
We also have the orange before my stop. So again, I'm not looking to be right all the time, but if I could be right 70% of the time and with proper position sizing, then I'm okay.
Yeah.
That's not normally, I didn't check everything that I would normally check if I was in a live trade. But that doesn't mean it won't work. Your trend line's right here. But remember, our overall trend is still further down. I mean, I would say my line in the sand is really just above my entry, which would be right about here. So, and we're getting close to market open. Are we not? Yeah.
We still have 45 minutes before the 9:30 open.
Is it 9:30? See what I know?
9:30, yeah.
I'm a swing trader. I don't care about that stuff.
You're usually in school.
Yeah, I'm usually in school. So that's 8:30 our time. So yeah, we got 45 minutes. So this could be just a nice little pullback to clean up the house. Remember our overall trend for the pound yen. Go on a daily chart. There it is. And look what we're doing. We're actually trading inside of a supply zone. That's all we're doing. The overall trend, though, is way up. Looking at SSI, majority of the traders are short, which means it's going to continue to move up. And we've reacted to this red line, which is a strong area of resistance. This is a daily chart. And what I would do, again, like I normally would do, if I was doing a swing trade, it's no different than if I'm doing, that's the beautiful part about what Al and I do, is it's pretty much the same regardless of time frame.
And the thing is, we can both take opposite position of each other and still win, because he's a swing trader and I'm more of a day trading type, scalper type of trader.
So there's our look. And we came into this area, the upper part, which is our red, high in the zone. We walked it down. If it comes back up, we can do it again. But where are we sitting at? We're sitting at the 61 line. That's where we're reacting to now on the bigger time frame. And remember, majority of traders are wrong and majority of traders are short. So my bet is that this is a short-term pullback, just temporarily. So let's slide this back a little bit so you can see a bigger picture. And now we're in my zone that I said that I would have gone short. Instead of a wedge entry, I'd have done this entry, which would have been a better entry. This is the aggressive one. This is the more conservative one. But the same entry that I had here, had I entered here, it came to the blue line and rejected it. We had the crossing right here. Our moving average are starting to flatten out. We'll see. There's your engulfing candle again. I'll kick myself if I don't win this trade from this point, which I think I could have. It's pretty close. That's a great candle if it'll close there. Again, this is a great lesson today. Tell your friends, look at this blue line. Falling off. Doesn't mean we're going to make a winning trade, but you can see that this fib tool does give you an area of where your eyes should draw to expect something to happen. It doesn't always work, but
either bounce or just going sideways and hesitate or that type of thing.
And this is a wonderful, you could have done this 3 times, literally 3 times. It broke here, you touched it here, you fell away. It came and touched it again, fell away. It touched again, and it's falling away. You had already been out of your trade, almost out of your trade by now. And we created a new supply zone. Notice my extra strong move, 1 candle in the base. That means that this has now become a little bit more of a wall above, next to the blue line, which is exactly where I do it again. Again, if we're range bound, this may be a place where you can take 2, 3, or 4 trades before it actually chooses to break out of that. And that happens on swing trading too, by the way. Doesn't matter. It's all the same.
Yeah, what we're trying to do is trying to give you guys a little different picture of what difference between what I do, what swing traders do. And
there's not much difference.
There's not a lot of difference. A lot of it is the time frame is the biggest difference. Price action is pretty much the same, regardless of what time frame you're on.
And you're looking at momentum, and I'm looking at trend.
Right, and but the biggest thing is what kind of a stop do you need in order to? Right. I mean, if you can catch a swing trade with the same stop that we use, then you can really be making some pips on that with the larger lot sizes.
Yeah, Daniela, I use FXCM. I love the platform. For me, it is a whole lot. We were talking about this with Al yesterday too. MT4, he's done real well learning to navigate it. I suck at it, just absolutely suck at it. And I've been using FXCM as a demo account. I don't place my orders with FXCM because I'm in the United States and they don't let us anymore. But I love the tool for plotting and charting. TradingView is my second favorite. Yeah, FXCM. FXCM, if you were in the States about 4 years ago, they did some shady stuff here in the States, so they were banned. So what I did is I signed up as a UK demo and put myself in the UK as a demo. Then you have open access to it. Yeah, if you're in the UK, you have open access. Yeah, I really like that. I like the FXCM drawing. TradingView is pretty solid too.
We don't have the supply and demand zones that he has, those pink and blue, pink and green lines or red and green lines. We don't have that. We do not have that tool for the TradingView. Although I understand that they are working on something similar to, like with I think Arrows are actually working on a overlay for TradingView with that. That's a different ball game. So basically, we just have to kind of draw our own zones with the TradingView.
Yep. Yep.
What's nice about these zones is you don't know the green zone. You can see it's off the chart. It could that green zone could be developed back in 2 or 3 years ago, for all we know. But if you scroll back, you'll see where that zone was developed and how far back it was.
Okay, so looking at this now, had I taken the entry here at the blue line, I'd have been out for another profit. However, I'm seeing a little bit of a switch change to me. You had a high, a low, lower high, higher low, higher high, higher low. To me, we're very sideways at this point, and we very well could be slowing down the momentum downward. So if this thing closes above this orange line, I'm going to close it out for a small profit. There's no reason, or a small loss, so there's no reason to take more. It still could work out. We can't predict the future, but it just seems to be very, very quirky right now. What's your RCS showing?
How big
7
target
pips.
are you looking at?
Still 7 pips from my entry with the break of the wedge. It's right here.
RCS is showing. Let me see. Let me find it here. I've got to look and see where we're at.
Garvin, yes, custom indicators can be used to TradingView. You can add those. That's part of what we use.
British yen, we're looking at a yen 5 and a British 0, or British 1, 5 and a 1. So we got a 4-point spread on the 30 and 50-minute chart. You have 4 points on the 5-minute, you have 4 points on the 15-minute, and you have 5-point spread on the 30-minute chart. So it's still showing weakness to the strength to the downside.
The wedge changed. That's all it changed.
I gotta find out where you went again.
I'm still here. I'm in Texas.
I'm still looking. Every time I do this, I lose and see what I'm looking at, what you're looking at here.
That's what I see now. We got a little bit of more of a wedge, and yeah, TradingView out. Custom indicators are built all the time. Very nice. Thank you, Garvin. Is that supply and demand tool for your TradingView? Is that what somebody's programmed it? It's probably similar to what I have. Mine's pretty intense though. It's not going to be quite the same.
Someone's programmed the supply and demand tool for TradingView.
Yeah, Garvin's was saying that he'll send something via Telegram to us.
Oh, thank you, Garvin. They really do help find out where those levels and zones are.
Yeah, and again, it's not replacing Arrow. Arrow's a nice alert system that we can use, but for me, it's a secondary confirmation more than anything. And I can't get Arrow on FXCM, so.
Yeah, so MT4 is not my favorite platform. In fact, I really don't like using it. The reason why I've started learning how to use it is because so many people, that's the only platform that they have and they use. So, but there are, like TradingView is the one that I use most of the time for my own. And you could have some custom indicators and things that we have. And we have some tools that we have shared some of the RCS tool. We've shared that for right now. And right now it's still a freebie to anybody that's in this room. I don't know how long that will last, but right now it's there's no time period on the extinction of it or the expiration of that. But there is some changes coming as far as how we set up these trade rooms and things like that, and there's some good things coming down the road, and so just keep an eye on the back office of Auvoria Prime, and you'll find some of the things that they're working on, and there'll be some announcements, I think, at the Orlando event of some of the neat things they have coming down the pike here.
You still plan to go that, Al?
I am, yes.
Good.
I need to get my ticket and get my hotel room set up, but yeah, I'm still planning on going. So with that,
you have to represent me.
You're not gonna be able to make it?
Nah, I've got family coming in. And then we go back to school.
When are you going back to school?
I think it's August 8th, but I've got 30 hours worth of classes I have to take for reading. Today, if you're a praying person, pray, because I'm going to be filling out an application for the high school for business information management. It's earlier in the morning. I get there earlier in the morning. I leave earlier in the day, but it's definitely down this line. It's more what we do. Not quite the same. Obviously, it's trading, but I'll be teaching high school students business information, setting up Microsoft and using Excel spreadsheets and things like that on their finances and stuff like that. Yeah.
Very cool. Very cool.
It's more, I mean, I love fourth grade. Absolutely loved fourth grade. And I don't know if I like third or not. I don't know because it's new, but I'm not great at teaching reading. In third grade, it's really big on reading. I'm a math, science, and history guy. And so with their focus on reading, it concerns me a little bit. I love the kids anyway, and they'll love me any which way. But I think the potential at Legacy, high school. My kids that I first taught are now sophomores, and it's a sophomore and senior class. It'd be good to see those guys. And I know a lot of those were in my stock market game. They're going to want to take this class again because they know that we're going to be doing financial classes. And that's what I'm finding about the high school kids. Most of them don't know how to they don't even know what a checkbook is.
No, they don't.
So to balance anything, they're thinking about, you standing on a rope. That's their balance.
Yeah, exactly.
They think that a debit card, as long as it's always full, and it's not.
The days will come where they don't even know what cash is. Never mind.
They don't. And we will dive into crypto a little bit. I have to learn a little bit about crypto, which is nice for me. I know a little bit, but today's kids need to know more than what they've been given as far as finances.
Yeah, exactly. Oh, good stuff.
Yeah. So once we get done with this session today, I'll go online and start working on online application. Let's see what happens. Mm-hmm. Break of that wedge again, about pretty much the same low. It's right at the 76. Again, guys, I want you to, we can't make this stuff up. I'm going to draw a horizontal line. I'll make it, what color was that? Was that red or orange? I'll put orange there just to be sure. Look how many times it comes down at 76. Remember I said that this is a good place to be a buyer? You could do the same thing. I wouldn't be a buyer at this point, not unless I knew that the trend was trading or changing or the momentum was changing. Right now, we're still in the down. But look at how many times it's reacted on that minute chart. So great tool. It's a great tool. Time saver, if nothing else. What we got? We got 8 o'clock. I would love to see this thing go.
Maybe about 2 more minutes. Actually, we might get another push right at about the 9 o'clock. We can go a little bit later today if we need to, because I don't think anybody's coming in behind us.
Yeah.
I'm gonna have to leave you guys. I'm going for my second shot right after our 9 o'clock.
Oh, all right. All right. Get immune. Yeah.
I'm praying for a very long needle.
Aw, thanks. Well, I'll be
that way you never get sick.
Then.
That way you never get sick again. Just a really long needle. I heard the longer the needle, the less chance you get sick.
Well, it's my second one, so I know what they're like already, Bri.
No, yeah.
Nice try.
Well, the second needle is at least twice as long as the first one.
Well, I heard it's the second dose. Not feel so great.
That's what I've heard. I heard the second dose is worse.
Yeah.
I did not get sick from either one of them. So.
And you had Pfizer?
I had Moderna. Yeah.
Moderna. Yeah. Okay.
I had Moderna. My wife had Pfizer, and my daughter, who just had the baby, had Johnson & Johnson. So we all had so we're well diversified in case anybody get adverse reactions down the road. So.
Wow. Daniela said she had COVID too.
I had COVID. Yeah. Back in January.
Yeah, if I had it, I have no idea that I had it. Let's put it that way. It would have been extremely mild.
I ended up, strangely enough, it seemed like to us in our household that the virus attacked where you were the weakest. So my hips and my knees and my lower back were just real sore one day, just ache. I went to school, no big deal. I didn't feel horrible. I just felt tired and fatigued. So I came home and I went to bed for 2 days and never had a problem with it. Kim, who suffers from migraines,
I know
had the total opposite.
Hideous issues with it.
Yeah, Kim, we were getting ready to call a neurologist because we were thinking she had a stroke because she was slurring her words.
Yeah. Yeah, I remember you saying that.
That was scary.
Even our neighbors here, I mean, they had it so bad that the woman, Brenda, had to sleep sitting up because she couldn't breathe. And that went on for days. So, it's
rough.
It can be pretty brutal on some people. Anyway, I'm going to head out, guys.
Okay, Eva, thanks for everything. We'll talk to you Monday.
Yeah, talk to you guys Monday. Enjoy your weekend, everybody. It was great seeing y'all in the room.
Yeah.
You too. Be careful.
Yeah, will do.
We'll give this another minute or two here. Oh, there you go.
Yeah.
But let's see what this is
I have
going to do right now. It's strange bound right now inside this wedge.
Yeah, I'm going to keep watching it.
Let me see where we are with our heat map here. Let's see. Right now we're still looking. The yen is a 5, but British is a 1. Pretty much across the board. Although it is starting to gain a little bit. The British is starting to gain a little bit of strength on the 5-minute.
I agree. I'm watching this because if it breaks above this area, I'm going to go ahead and take the small loss. I'm going to bring it down. That way my day still stays profitable. This mess right here just tells me we're not going down there right now.
Mm-hmm. Let's try to build some zones underneath it.
Yeah.
This is where it's range bound. This is where you try and stay out of the noise.
Yeah, I agree. And this is probably where I'm going to go ahead and I'm going to drop down. And it may be, normally I won't do this, but because it looks like the momentum is changing, there's no reason to lose money. And again, just because we have our stop at 15 doesn't mean we can't get out earlier if the picture changes. I talk about that with my swing trading a lot. When the picture changes and you want to take a smaller loss, do it. I want to see a close above this blue, though. If this thing closes above the blue, give that 2-pip move. There we go. And we just watch it.
So with it, Brian, why don't we just should we wrap this thing up today?
That's up to you. I mean,
yeah.
I think I'm going over here. I'm looking for something here real quick before we take off on. Where's my stuff that I wanted to show?
So it looks like it's starting to break out of the top of that wedge. In reverse.
And then we normally done at 8 o'clock every day?
Pretty much. Yeah, 8 o'clock your time, 9 o'clock our time.
Yeah, I mean, there's my close.
On Tuesday, Wednesday, Thursday, there's somebody coming in after us for that 9 to 11 or 12 o'clock session, but I'm not sure how many days they're actually finding people to run that room.
We'll go ahead and close that out. Go by other chart, wherever it's at.
Notice that there was any last minute questions or comments that anybody has before we head on out here. Let's see anything. Thank you, Danelle. Thanks for your participation. You're always a pleasure to have in the room. And anybody else, any questions, comments, any hand raises, attendees?
It looks like we're all.
But that's good. So it's a Friday. Good. Enjoy your weekend. Everybody have a safe weekend. Stay green, stay safe. See everybody Monday, 7:39 again. Monday, same time, same place.
See you guys. Have a great weekend.
See you then.